Hi, and welcome back to Reading Tea Leaves. I'm John Ross. This is where I take your stock and I run it through my brew of technical sentiment and macroeconomic tea leaves to let you know what I think of the stock and where I think it's headed. Now, today's stock is a lithium stock, and today's tea is a really enjoyable black tea. I'm going to tell you about both of these. Before I do, hit the likes, hit the subscribes, hit those buttons, drop us comments, questions, feedback, or a ticker symbol in the comments section below, and we'll run your stock through the tea leaves in an upcoming episode. Now, today's stock is Livent Corporation, and this is a lithium stock, a lithium company. They produce lithium compounds, lithium metals, but they also produce lithium-ion batteries, those that serve the mobile phone and mobile device battery industry, as well as the electric vehicle industry. But they have such an array, really, of products and industries that they serve beyond those normal ones when you think about a lithium producer. So a really neat company here, likely going to attract a lot of investor attention over the coming years as the world continues to move towards this more renewable fuel, alternative energy, green sustainability type of movement. So Livent, probably good times ahead, but that doesn't necessarily mean in the short term that this stock is a buy. Now, last month it came out with its first quarter earnings report. They missed estimates on profits and on revenues. They blamed COVID-19, the pandemic, for a lot of the pressure that they saw and that the lithium industry in general saw. So we saw reduced demand for lithium and lithium products. That was in China, that was really around the world. So some headwinds there, but they also noted in their earnings announcement how really the backdrop of low lithium prices is really dragging on their ability to grow their profits and to grow their revenues. And really the price of lithium has been in a bear market for several years now. It's just been this relentless downtrend in the price of lithium, and that doesn't bode well for these guys in the near term. Eventually, lithium will re-enter more of a bullish cycle, and that will start to really pad the bottom lines, top and bottom lines for these companies. But right now that just isn't there, and that could continue to be sort of a drag on these stocks. Now, these stocks can start to turn before the underlying price of lithium turns, but I think it's something we need to be mindful of as we think about buying into a stock like Livent. Now, with that said, one more note before we jump into a chart. Morningstar, back in February, they noted that this stock was undervalued based on their metrics and things, and that stock was trading at $10 at the time. This was at the end of February, before the real sell-off in the broad market and in this stock really took place. So at $10 per share, they said this stock was undervalued. Today it's trading just shy of $8 per share, so that's suggesting it's still undervalued here. But that, again, long-term stuff. Keep that in mind for if you're a longer term investor, but if you're more short term, if you're looking to jump in with some speculative money here, these are some other things that we should be thinking about. So let's jump into this chart and analyze the price of Livent. So this is a daily chart. I'll first draw your attention to the 200-day moving average. That's the blue line running through the black line towards the top, and that just shows I use that to show where price is trading relative to its longer term trend, or its 200-day moving average. As you can see, this month the stock has jumped back above its 200-day moving average, which is a positive sign and can really draw in new buyers into this stock. However, we have seen more recently a pullback, and it is now testing that 200-day moving average in the last couple of trading days. So, question is, what should we be looking at as whether this stock might be able to hold this 200-day moving average support level, or whether it might break down through it. In order to kind of get a sense of what's going on first, let's look at the apex movement patterns, or the AMPs as I like to call them, which are really based upon human nature and how behavior and confidence cycles through prices. So I use common, popular Fibonacci retracement and extension levels to kind of get an idea of where we are and where I think we're going. I would first draw in a retracement level on the decline we saw from February to March, just to get a sense of how much of that this stock has retraced. And it is retraced in this rebound almost 61.8% of its decline. So that's pretty good, pretty strong, pretty healthy. However, it is now at resistance at this level. And this is why we're starting to see the price decline here, why we're starting to see some pullback, in addition to some of the pressure from the broader market and some selling we've seen there as well. Now, here we are at the 200-day moving average. How did we get there? I'll draw in an extension tool just to kind of show you the three-wave pattern I'm looking at seeing in this rebound. I'll even draw in the ABC just to help you visualize this. So as you can see, that C wave, which is an extension of the A wave, finished up somewhere around that 138% level, around $9 per share. Maybe on an intraday basis, came up, tested close to that 161.8% level. So again, a likely logical stopping point here at a key retracement level and a key extension level. So we're starting to see that decline. How much has it declined? How much will it still decline? I'll put in another retracement, first of the C wave, and that'll show us that this decline in recent days has taken it down 50% of that C wave rally. So that's pretty healthy, that's good, and that suggests that the stock could be moving back higher from here, where we've seen this sort of sideways chop in three waves so far in the last couple days. But what kind of alternative could we be looking at as far as a deeper pullback? I would use this retracement tool on the broader rally that we saw from the low in March to the high in June to get a sense of what's going on here. And the pullback, the consolidation, has taken it down to a 38% retracement of that move. So again, another healthy move. So we could be finding a good sort of support level for this near-term pullback. However, I do like to look for three-wave moves, suggesting that this decline is not quite done yet. So in order to get a sense of if it's not done, how far can it go, I would use an extension tool to say, okay, here's the initial decline that has happened here, and then the consolidation correction of that, which has happened to here. And then we have a target, a downside target of around $6 per share if this decline extends, or even as far as $5 per share. Now, what kind of move is that from current levels? If we get to $6 per share or so, that's a 23% drop in the stock. And then even further than that, a 39-40% drop in the stock. Now, we don't have to get there. There are a lot of potential support levels that will come into play that could prop up this stock. However, if we see some broad market selling, then chances are we'll likely see some of these deeper levels get hit. We'll be targeting our initial target around that $6 per share, a 100% extension of the initial decline and sell-off here. Again, want to full circle back to that 200-day moving average. If we break back below that, if this stock falls back below its 200-day moving average, that will likely kind of open the door for it to go down and test these other support levels that we're looking at here. Finally, before we leave this chart, let's look at that the bar indicator across the bottom. When it's black, that's essentially a long trade or a buy. When it's red, it's essentially a short trade or a sell. And when those move and cross through that blue signal line that I've drawn in there, that tends to suggest you move to a flat position or you close whatever position you're in. So in this case, we've been in black in a long setup here. However, in the last couple of trading days, in this consolidation, in this correction that we've been looking at here this morning, the black bars have dropped and crossed through that signal line. So to me, it makes sense to be flat, not to be long, not to be buying this stock at the moment. We want to be watching for if these black bars turn to red and this stock becomes a sell. So that's kind of what I'm looking at here. This will add to the sort of kind of affirm or validate this idea that we need to see a little bit further downside in this stock before it begins and sort of resumes this rebound that has happened since March. So short term, I think this is a sell. I lean towards a sell on this stock. Longer term, I do think this sort of has the makeup to be a good stock for the long haul. Of course, has to get through some of the recessionary pressures and headwinds that are in the market. The low price cycle for lithium still a drag, but ultimately, longer term investors keep this stock in mind. Shorter term traders, I'd be leaning bearish on this stock. Now, today's tea is called a golden snail black tea. And now I've told you I'm not a huge fan of black teas. They tend to be bitter, but there are definitely good quality teas out there that are black teas. And this golden snail is one of those. It is super smooth and super malty. It almost has the maltiness of an English breakfast tea, if you're familiar with that, but it doesn't really have the bitterness and the heaviness that has. So it really makes it super easy to drink, super smooth, smells great, and is really one of my favorite black teas. I would highly recommend you go out and try it, and if you do, don't be thinking you're going to throw milk and sugar and all kinds of other junk in there. I don't do that with any of my teas, but I know some people do that with their black teas. Don't do it. Resist it. Just go out, find this. It is golden snail black tea. It has its name because the leaves curl up into this nice golden brown when they're processed and dried and everything. But then when you infuse them or you brew them, they really unfurl to this long leaf, full leaf black tea. But definitely check out this tea if you can go find it online. So that's all for today. Until next time, drink up and we'll talk soon.